Hello everybody, my name is Christian Charlo. Welcome to this market report. Today we're Thursday, August 20th, 2015. Today folks, we have a bloodbath on the market. China continues to worry investors because two days ago, the Chinese central bank has injected some money into its financial system to try to calm down the market after the UN drop and try to stop the capital outflows. But investors are not convinced that this will be enough. So this is weighing in an investor's mood. Also, we have today the Greek Prime Minister that announced that it will hold on some elections. We know that today Greece has received the first tranche of its $86 billion bailout package. So this first tranche will be used to repay some debt, but those elections, I think, are creating again some worries on the market. So with the situation here, we have a clear bearish cycle that is installed on the Nasdaq. However, technically speaking, we're reaching a point where several times we have had a rebound on the Nasdaq. It's the same thing too on the Dow Jones here, where we have that former resistance which corresponds to support. So it's really likely that with such a big decline today, that tomorrow we might actually have a rebound, because take a look at the SPY. It is a situation where that might trigger a rebound. So several sectors are in a bearish cycle. What we have favored on marketgurus.tv, that you can have access for free for 10 days just by clicking at the link below, is to favor stocks that are shortable, yes, but at least can give you some opportunities before they reach the oversold situation. One key example of that is H&A Equipment Services. It's a stock that we still have, that we recommended today in our analyst shorts portfolio. Not a big loss potential, because at 1740, 1750 we're gonna get out. So far, if we take a look at the stochastics, we're still in the overbought situation, and we have some room to go before we reach the oversold situation where a wave of buyers might step in on that stock. So that's actually one of the best short opportunity, and it's in the industrial sector, which is a sector that is lagging. But today I don't want to talk to you a lot about stocks that are shortable. I mostly want to focus on the gold sector, because this is a sector where we have a lot of breakouts. Today, it's a great timing to get into the gold sector. It's a clear bullish cycle. Same thing too for gold. But those are the risks that you face in the gold sector. First of all, the risk of a correction is likely, because if ever the Fed decides to not raise interest rates in September, well, it's going to be good for gold. However, analysts expect that the Fed won't do so, but they're only analysts. They're not the Fed members. The Fed members are the ones who take the decision. So the gold sector momentum is explained because investors do not expect the Fed to raise interest rate. The second thing also is, I think that could continue to allow the rally to continue is if ever the situation in China worsens. The Greek elections, well, there's a new government that's more to the left. Those are actually some risk factors that might feed investors' appetite for gold. So because there's a risk that the Fed might raise interest rate in September, which is coming soon, I think what you should take into account is, first of all, if you're buying some either bullish ETF today on gold, such as Nugget or HGU on the TSX, make sure that you put your exit point on those ETFs. So depending on your risk tolerance, some of you might say, you know what, if I'm buying HGU today, well, if ever we lose all of today's gains, I'm going to get out, because the ETF is already surging by 8.17%. Therefore, I'm not going to wait for the ETF to go below 366 to close that position until it reverses this upward trend. So this is actually the risk factor you have to take into account, because on today's rally on the gold sector, several stocks are surging by more than 5%. New gold is also a breakout, but it's lacking momentum. So new gold, if ever the momentum continues, you know we can reach 360. It's a short-term gain, but that's the gain that you have. This is where you should put your exit point on new gold. So if ever at the closing of the bell we see that new gold loses all of today's gains, goes below 319, it will be classified as a false bullish signal. But if it does maintain its gains, 350 is the target to take some profit. Torex Gold, clear breakout as well on that stock. Look at this, breaking also an important resistance there on Torex Gold. Now Torex Gold is a solid breakout. 122 is your exit point on Torex Gold until it reverses its upward trend. I have nothing to say on that stock. Alastair Gold, a pretty nice one too, but surging by 8.30%. Therefore, your exit point should be whenever we lose all of today's gains, so around 292, instead of tolerating an exit point on the break of that support at 280, because with today's increase of 8.30%, your loss potential will be more than 10%, and it's not wise to do so. Fortuna Silver, a nice breakout. And one thing you could do to determine what is my target on that stock to take some profit, what I advise you to do is to take a look at the moving average. For instance, in Fortuna Silver, we have a breakout today, a buying signal indeed. Now, where is the 100-day moving average? Towards 338. So you know that at 338, which corresponds to that former support there, this is the point where you're going to have to take some profit on a stock like Fortuna Silver. So this is the potential that you have, a short-term potential, but you need to respect first your profit-taking opportunity, and second of all, you need to respect your exit point. With a 9.22% increase, instead of waiting for the stock to break that support at 268, which will be more than 15% of a loss potential, what you should do is put your exit point. If ever we go below 285, we lose all of today's gains on a stock like Fortuna Silver. So this is what we have, folks. I also wanted to mention here that the financial sector in the US is weak as well. But because so many institutions hold on to those financial stocks like Goldman Sachs or American Express, if ever there's a rebound tomorrow, it's really likely that those stocks that are showing a clear bearish signal today might have a rebound. So one alternative, I think, to trade this bearish momentum on the financial sector in the US is to go with an ETF, which is FAZ, F-A-Z in New York. I think it's the safest alternative to trade the bearish momentum on the financial sector. So this is the list here. Here are all the list of gold stocks that are active, right, that are breaking out. But as I said, make sure that you put your exit point on those stocks. The ones with an I are some ETF on gold if you're not comfortable to buy those stocks. On the financial sector, I think FAZ is definitely a great alternative because it's likely that a lot of stocks might be bought back in the financial sector, stocks that are breaking down, such as Goldman Sachs or American Express. And the industrial sector is also the weakest index, and this is why on marketgurus.tv that you can have access for free for 10 days, we have recommended HEES on NASDAQ as our best pick of the day. So that's it, folks. This was Christian Charlo for marketgurus.tv. You can always follow us on Facebook, Twitter, chat with us, share your strategies, and never forget, the more money you make, the happier we are. See you next week.